major real estate companies announced layoffs this week, so I'm going to touch on my thoughts, how we should be thinking about and diving into the numbers behind these layoffs and what it means for you, the real estate professional. Is this further sign we're headed for a real estate crash? Before we get into the meat of it all, if you enjoy this video, give it a thumbs up, consider subscribing, and enjoy. So as we can see from the CNN article, both Redfin and Compass have announced layoffs. I'm going to scroll down here. CNN goes to say mortgage rates are climbing, home sales are dropping, and some of the nation's largest real estate companies are announcing layoffs. Redfin set to cut about 8% of its employees. Compass said it will reduce its workforce by 10%. The cutbacks are the latest indication that the red-hot housing market is showing signs of cooling. In a memo to employees Tuesday, Redfin CEO Glenn Kelman said the company wouldn't lay people off unless it absolutely had to, but that time has come. So first, let me just say, if you were one of the individuals who was laid off, maybe you are a Redfin agent, an employee, or an Compass employee, my heart goes out to you. Getting laid off is not fun, and we are in unsure economic times. And so that added stress, again, my heart goes out to you. So that's the first thing. I think from a real estate perspective, I think we have to look at all of these types of events with data, and we have to take a perspective that none of this is good. I've seen so many people in so many real estate Facebook groups kind of celebrate or even show signs of happiness that these layoffs are occurring, right? So many of us have hung our hats or hung our license with a specific brokerage, and we bleed that company, right? We are all about that company. In my opinion, that doesn't mean that we should root for these types of things to happen. At the end of the day, these types of layoffs are really a bigger sign that the economy is shifting, right? We are not in this complete bull market where everything is up, 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 and that is not good for any of us. So these, even if you aren't a part of these companies, even if you weren't laid off, this is not a good thing for you and or your situation, in my opinion. So let's touch on the actual stats behind this. So Redfin is laying off about 8% and Compass is laying off about 10%. In Redfin's letter, let me scroll down. He says demand is off by 17%. With May demand 17% below expectations, we don't have enough work for our agents and our support staff. I think it's important to understand that with Redfin, a lot of the people that were laid off, or a chunk of the people that were laid off, were agents who were paid a salary. If you're watching this video and you're a traditional independent contractor agent, that is different than the situation that you are in, right? You are an independent contractor. You hang your license with a real estate brokerage, but you are not an employee of that brokerage. Redfin ultimately tried to change the model and hire full-time employee agents, and they still have full-time employee agents. Well, what happens if they feel like the market is going to decline, or there's not going to be as much work, or there's not going to be as many leads? Again, we've touched on this in previous videos, and I'll put a link at the end of this video to my housing market crash video, but supply and demand is shifting. And so unfortunately, if you're an employee of the company, you are at that company's discretion, whether you are employed or not. If you're an independent contractor and you're looking at these things and you're having concern, at the end of the day, there's almost no scenario that I can think of, unless your brokerage literally goes bankrupt and can no longer afford its office lease or the things that they've promised its agents, unless it literally goes underwater, you will not be let go as an independent contractor. Why? Because you are ultimately the product that company is trying to hold on to, right? You make that company money. In the situation of Redfin, unfortunately, employees cost money as well as make money. So they are able to, if they have concerns about the market, ultimately let people go in hopes of securing some of those future funds and ensuring that they don't have continued losses. Now, if we scroll down here, I think it's important that we touch on the state of these companies, right? And in the Redfin letter, it actually says, it's time to make money. We're losing many good people today, but in order for the rest to want to stay, we have to increase Redfin's value. And to increase our value, we have to make money. We owe it to everyone who has invested your time and treasure in this company to become profitable profitable, and then very profitable. What's important to understand about both Redfin and Compass is that these companies were not profitable. And in fact, when I heard the news that Compass was laying people off and Redfin were laying people off, I immediately thought to this article that I had read almost a month ago in Inman. Now, I'm not going to read through this. You can go and find it, but it says, Compass approaching critical cash burn. Compass is not in immediate peril, but is approaching a critical juncture where it'll either need to raise money or reduce expenses. So both Redfin and Compass were not profitable companies, are not profitable companies. And they both really looked at themselves as tech companies versus real estate companies. And when you think about a tech company, you have to understand that tech companies come with a certain type of employee, right? It's not just office staff and admin and brokers and team leaders. Tech companies come with engineers, product managers, coders, people on the technology side of things. And when you're a tech company and you're operating at a loss, it usually means that you're looking forward to future growth, right? You're hiring for future growth. And so there was a good probability that both Compass and Redfin were expecting to grow X percentage. They had hired people on as employees to take on that growth, right? To support that growth. And with the suspected decline in sales, ultimately felt like that support wasn't going to be needed anymore. So I think it's important for us to understand that neither of these companies were profitable so that we can understand that it's not like they were profitable and profits are plumbing. They were operating at a negative, have been operating at a negative, and they probably projected out some level of sales that they now are seeing decline. And so they're doing the prudent thing to actually cut their losses before things get even worse. Again, if you read through this article, they talked about this being potentially a inevitability for Compass, regardless if the market was shifting or not. Okay. And again, if you're looking at this, Compass reports $188 million first quarter loss. CFO resigns. This was published in May 12th of 2022. So again, huge. The firm recorded $1.4 billion in revenue for the quarter, up 25% from the same period a year ago, against $1.6 billion in expenses. $1.6 billion in expenses in a quarter for a loss of 45 cents per share. Again, not uncommon for technology stocks, but with a lot of things technology related and a lot of things growth related, if they don't forecast that growth happening or not happening as fast, they have to cut losses to ensure that they either become profitable or can sustain their losses longer term. So is the market crashing? Is this the sign that the housing market is on an inevitable downturn and we're going to end up in the 2008-2009 market? Now, again, I've done a whole video on why I don't think we're there, and I'll put a link to that up over here. And I'll link it at the end of the video. At the end of the day, we are seeing things shift, right? We are seeing supply increase because things aren't selling as fast. And we are seeing demand decrease because of rise in interest rates. And people have to prepare for that. We have to prepare for that as agents. Companies have to prepare for that as companies. And brokerages have to prepare for that as brokerages. So in my opinion, this is not the end all be all that says we are headed for a 2008-2009 crash. If we look at and we study our individual market stats, we will get a much better picture of what that looks like. I mentioned it again in that housing market crash video. But here in my local Phoenix market, we are still absolutely in a seller's market. Now, are things shifting? Yes, we went from an extreme seller's market to a less extreme seller's market, but we are ultimately going to have to pass through a seller's market into a neutral market, into a buyer's market, and stay in a buyer's market for some period of time for us to actually see prices decrease and for us to actually end up in a crash. Now, does that mean that that's impossible? No, but we have some ways to go before that happens. Now, could it happen quick? Potentially, but study your market, understand what's going on, and understand that everyone is going to need to move some way, shape, or form in the future. So even if the next 12 months look murky, study your market, stay tuned with this stuff, make sure you understand what's going on in the market, and you'll be in a much better shape than 95% of the agents out there. Okay, I hope this was helpful. Drop a comment below if you have any questions, and I'll catch you on the next one.